Hello students, welcome back to 10th session on consignment account. Let me concentrate on 7th problem. Ramakrishna Oil Mill consigned 500 tins of ghee to Malhotra Brothers, Chennai at rupees 80 per kilo and each tin cost rupees 1320. See, one tin cost 1320 divided by per kilo cost, that is 80. 1320 divided by 80, you will arrive at what exactly a tin consists of. A tin consists of 16.5 kgs of ghee. So kgs in a tin is equal to total cost per tin divided by cost per kilo. Did you get my point? Total cost per tin divided by cost per kg is equal to kgs in a tin. Means a tin consists of how many kgs of ghee? A tin consists of 16.5 kgs of ghee. So once you know that, let me concentrate on the problem. Ramakrishna Oil Mills paid 500 for carriage, 2500 as freight, 2000 as insurance. During transit, 20 tins were accidentally destroyed, for which insurance company paid directly to the consignor 12,500. The damaged goods were sold by Malhotra Brothers for 11,000. After 3 months, Malhotra Brothers reported 410 tins were sold at 1,500 per tin and they incurred golden rent of 15,000, labor charge of 5,000. They are entitled to a commission of 5% in which 1% is del creta. The consignee also reported a loss of 33 kgs due to leakage. Assume that consignee paid the dues by bank draft, show the necessary ledger account in the books of both the parties. So this is all about the problem. So before we start solving the problem, what we need to do is we need to concentrate on few important things which were not there in the previous problem. If you looked at the previous problem, we never had information about what is that? Recovery from insurance company. When there is abnormal loss, some amount is recovered from insurance, which was not there. In that way, this problem is different from the previous problem. In addition to that, in this problem, we have information about abnormal loss, we have information about normal loss. Both the losses are there particularly in this problem. So in these two aspects, this problem is this problem is different from the previous problem. So what they asked, we need to assume that consignee paid the dues by bank draft. Necessary ledger account need to be prepared in the books of both the parties. So when it comes to necessary ledger account, as there is abnormal loss, 4 accounts need to be prepared in the books of consignor: consignment account, goods sent, consignee account, goods sent on consignment account, abnormal loss account. The next one is in the books of consignee, we need to prepare only one account. That is consignor account. We will see that later. We will concentrate on preparation of accounts in the books of consignor. See, let me start reading first sentence. From first sentence, Ramakrishna Oil Limit Mills consigned 500 tins of ghee to Malhotra Brothers of Chennai at rupees 80 per kg and each tin cost 1320. So whenever consignor sends goods to consignee, journal entry is consignment account debtor to goods sent on consignment account. 500 into 1320 means 6,60,000. Ramakrishna Oil Mill paid 500 for carriage, 2500 as freight and 2000 as insurance. These are details relating to expenses incurred by consignor. So journal entry, consignment account, debtor to cash account, totally 5000. Write what this 5000 consists of in particular column separately. They have not done it, but you need to do it. You have to write 500 carriage, 2500 freight, 2000 insurance. Totally you need to put 5000 outside. Then, during transit, 20 tins were accidentally destroyed, for which insurance company paid directly to the consignor 12,500. This sentence is relating to abnormal loss. We will treat this abnormal loss later. We'll keep this sentence as it is. Don't forget to take it before you closing the accounts. Then, the damaged goods were sold by Malhotra Brothers rupees 11,000. So, means 20 tins were damaged, but they were sent to Malhotra. Malhotra means consignee. Consignee sold this. Whenever consignee sells goods sent by consignor, whether it is damaged or good condition goods. So we need to pass a journal entry, consignee's account debtor to consignment account. You just see here, consignees, that is Malhotra brothers account debtor to consignment. So damaged goods 11,000, they added it to sales of good goods which was not damaged. So you can treat it separately also. You can write like this. Malhotra brothers account means consignee's account debtor to consignment 11,000. So in consignee's account, Malhotra brothers account debtor to consignment 11,000. They took together damaged and good goods, sale of damaged and not damaged goods made by consignee together. So you can pass separate journal entry like Malhotra brothers account debtor to consignment 11,000. Here Malhotra brothers account debtor to consignment 11,000. You can do like that also, so that you completed entry for this 11,000. Then after 3 months Malhotra reported sales of 410 tins. So there is a sale of not damaged goods. So what is the journal entry? Malhotra brothers means consignee's account debtor to consignment account. So 410 into 1,500, 6,15,000. In Malhotra brothers account debtor to consignment 6,15,000. So we pass two separate journal entry, one for sale of damaged goods, one for sale of good goods. We can combinedly do it. They did like this. They combined it. Malhotra, only one journal entry they passed. Malhotra brothers account debtor to consignment. Under that, not damaged goods 6,15,000. Damaged goods sale 11,000. Totally 6,26,000. You can do it separately also. You can do it combinedly also. When you combine it, only one journal entry need to be posted to ledger account of both consignment as well as Malhotra brothers account. So then expenses incurred by Malhotra were Gordon rent 15, labor charges 5. What's the journal entry? Consignment account debtor to Malhotra brothers account 20,000. So even on credit side of Malhotra brothers, consignment account debtor to Malhotra brothers 20,000. So then Malhotra brothers entitled a commission of 5% in which 1% is del creditor. Out of this 5%, 1% is del creditor. So far we have not come across del creditor commission. Here they have not given any base for calculation of del creditor. Just like how we calculated ordinary commission so far, in the same way we will calculate now. This 5% itself includes del creditor. So 5% on total sales affected by consignee. 5% on total sales affected by consignee. 6,26,000 into 5%. So that is 31,300. 5% itself includes del creditor. In case if there is a sentence that 5% ordinary commission, 2% what is that del creditor commission, which should be calculated on credit sales. If sentence says so, then what we will do is 5% will calculate on total sales, ordinary commission. Then del creditor commission will calculate on credit sales. But there is no such information in this problem. 5% itself includes del creditor. That's why in the 5% itself there is del creditor. That's why 4% ordinary, 1% del creditor to be calculated on total sales affected, as there is no separate base for del creditor commission calculation. So what's the journal entry? Consignment account debtor to Malhotra brothers 6,26,000 into 5%, 31,300. This will be recorded on credit side of Malhotra also by consignment 31,300. Then the consignee also reported a loss of 33 kgs due to leakage. I have already informed you in the last class, when there is loss arises out of leakage, spoilage, then what is that evaporation, but then wrong handling of goods, then while breaking the goods if there is a damage. Such losses are known as normal losses. When there is normal loss, there is no separate treatment for it, but while calculating closing stock, we need to take into consideration. So while calculating stock, closing stock, we need to take into consideration. Then assume that consignee paid dues by bank draft. So whatever amount due by consignee, he paid in terms of bank draft. We have passed all entries except for abnormal loss. Abnormal loss will not create any impact on consignee account prepared in the books of consigner. So I am passing entry for this last sentence. Assume that consignee paid dues by bank draft. Journal entry. Bank account debtor to consignee account. Balance in Malhotra Brothers 5,74,200. So that Malhotra Brothers account means consignee's account in the books of consigner get closes. Now, I have not passed entry for one thing, that is for abnormal loss, and even I have not passed entry for closing stock. Try to understand. So, let me calculate abnormal loss first. When you look at treatment of abnormal loss in this problem, it is quite different from how they treated in previous problem, because we have come across abnormal loss even in previous problem. Yes or no? But let me not treat, either we can go for this treatment or we can go for the treatment what we have done in the previous problem. I'll explain the difference between how they treated in this problem and how we need to treat in case if you solve the same this problem based on how we treated abnormal loss in the previous problem. ಸೊ ಅರ್ಥ ಮಾಡ್ಕೊಳ್ಳಿ ಮಕ್ಕಳೇ, ಇಲ್ಲಿ ಅಬ್ನಾರ್ಮಲ್ ಲಾಸ್ ಟ್ರೀಟ್ಮೆಂಟ್ ಸ್ವಲ್ಪ ಡಿಫ್ರೆಂಟ್ ಆಗಿ ಮಾಡಿದ್ದಾರೆ ಅವರು. ನಾವು ಅಬ್ನಾರ್ಮಲ್ ಲಾಸ್ ಟ್ರೀಟ್ಮೆಂಟ್ ಅನ್ನ ಹೇಗೆ ಹಿಂದಿನ ಪ್ರಾಬ್ಲಮ್ ಅಲ್ಲಿ ಕಲ್ತ್ವಿ ಹಾಗೂ ಮಾಡ್ಬೋದು ಅಥವಾ ಹೀಗೂ ಸಹ ಮಾಡ್ಬೋದು. ಅರ್ಥ ಆಯ್ತಾ? ಫಸ್ಟ್ ಅಬ್ನಾರ್ಮಲ್ ಲಾಸ್ ಕ್ಯಾಲ್ಕುಲೇಷನ್ ಮಾಡ್ಕೊಳ್ಬೇಕು. ವ್ಯಾಲ್ಯೂ ಹೇಗೆ, ಕಾಸ್ಟ್ ಆಫ್ ಗೂಡ್ಸ್ ಲಾಸ್ಟ್ ಅಬ್ನಾರ್ಮಲಿ 20 tins ಇಂಟು 1320 per tin 26,400 ಪ್ಲಸ್ ಯಾವಾಗ ಲಾಸ್ ಆಗಿದ್ದು, ಲಾಸ್ ಅರೈಸಸ್ ವೆನ್ ಗೂಡ್ಸ್ ಆರ್ ಇನ್ ಟ್ರಾನ್ಸಿಟ್. ಸೊ ಇಟ್ ಈಸ್ ಬಿಫೋರ್ ರೀಚಿಂಗ್ ಟು ಕನ್ಸೈನಿ. ದಟ್ಸ್ ವೈ only consigners non-recurring expenses proportionately to be added. So journal entry, to be added. So add proportionate expenses of consigner. Consigner incurs 3 different expenses. All are non-recurring. So he incurs for 500 tins. How much for 20 tins? 200. So value of abnormal loss is 26,600. How much they recovered from insurance? 12,500. How much damaged goods were sold? 11,000. So totally 23,500 there is a recovery for this abnormal loss. So the amount that was not recovered 3,100 is a loss. So what they did is they showed this 3,100 only in consignment account. So what was the journal entry they passed? Profit and loss account debtor to consignment account 3,100. This is the way in which they treated this 3,000. We can treat differently like how we treated in previous problem. I'll just explain. See, when we calculate value of abnormal loss, you can pass a journal entry. Abnormal loss account debtor to consignment account 26,600. Then you need to prepare what is that? Abnormal loss account journal entry. Abnormal loss account debtor to consignment 26,600. Then when you recover from insurance company, journal entry cash account debtor to abnormal loss account 12,500. When damaged goods were sold by consignee, so journal entry cash account debtor to abnormal loss 11,000. So debit side of abnormal loss is 26,600, credit side is 23,500. So the difference is 3,100 should be transferred by transferring it to, should be closed by transferring it to profit and loss account. Journal entry profit and loss account debtor to abnormal loss 3,100. See, they just showed 3,100 in consignment account. But if you treat this abnormal loss just like how we treated in the previous problem, the treatment is like this. You need to credit consignment account by recording as an abnormal loss account debtor to consignment account. You need to open an account known as abnormal loss on debit side. Abnormal loss account debtor to consignment 26,600. When there is a recovery, cash account debtor to abnormal loss 12,500. When there is sale, cash account debtor to abnormal loss, because this is sale of abnormal loss goods, means damaged goods, 11,000. So there is again balance in abnormal loss that should be transferred to profit and loss account. So profit and loss account debtor to abnormal loss 3,100. In that way also you can show, or in this way as shown in this problem also you can show. What they did is they calculated a loss not recovered and they showed it as profit and loss account debtor to abnormal loss 3,100. So that abnormal loss entry is over. Now the closing stock. We sent how many tins? 500 tins. How much were lost? 20 tins were lost, 480. Again, there is a leakage of 33 kgs. So 33, 1 tin means 16.5, 33 kgs means 2 tins. So 500 tins, minus 20 tins is equal to 480 tins. 480 tins minus 2 means 478 tins minus 410. 410. So there are how many tins of goods still with the consignee which was not sold? 68 tins. Sorry. Yes, 68 tins, not kgs, 68 tins. Here it is given as 68 kgs. It is not 68 kgs, it is 68 tins. 68 tins into cost per tin 1320, 89,760 is cost of closing stock. You need to add proportionate non-recurring expenses incurred by consignor. He incurred 5,000 for 500. How much for 68? So answer is 680. Then proportionate non-recurring expenses incurred by consignee. What and all expenses incurred by consignee? Just see, golden rent of 15,000, labor charge of 5,000. Only 5,000 is non-recurring. 5,000 he has incurred for 480 tins because 20 tins were last and 20 tins were sold. He received only 480 tins. So 5,000 he incurred for 480. How much for 68 tins? It will become 708 when you cross multiply it. So value of closing stock is 91,148. Journal entry to be posted to consignment. Consignment stock account debtor to consignment account 91,148. Calculate the total of credit and total of debit. The credit is more than the debit, so there is a profit to the extent of 16,448. Journal entry consignment account debtor to profit and loss account 16,448. We need to prepare goods sent on consignment. First journal entry was consignment account debtor to goods sent. So on goods sent on consignment, on credit side by consignment 6,60,000. Then goods sent on consignment account should be closed by transferring it to trading account. So to trading account 6,60,000. Now for the first time we are preparing consignor account in the books of consignee. See, it is just opposite of consignee account in the books of consignor. Just look at consignee's account we prepare. That's opposite is consignor account in the books of consignee. If you are correct in preparing consignee account in the books of consignor, you reverse it while preparing consignor account in the books of consignee, but not the same journal entry. That is very much important. See, consignee incurs expenses in the books of consignee journal entry. Consignor account debtor to cash 20,000. Consignee need to get commission in the books of consignee journal entry. Consignor account debtor to commission 31,300. Consignee sold the goods for cash journal entry. Cash account debtor to consignor 6 lakh. How much? 15,000 plus 11,000, 6,22,000. Consignee settles the amount to due by paying bank draft. Journal entry, consignor account debtor to bank 5,74,700. You just compare this account with the consignor account. It is just reverse to consignor account, but the entries are different because we are passing entries in the books of consignee. What is the entry for? Expenses incurred by consignee. There is no entry for goods received by consignee. There is entry for expenses incurred, consignor account debtor to cash. There is entry for commission due, consignor account debtor to commission. There is entry for sales made, cash account debtor to consignor. There is entry for settlement, consignor account debtor to bank. So that's all. So this is all about problem number 7. Listen, in this problem we studied few different things. There is normal loss, there is abnormal loss, how normal loss create impact on calculation of closing stock. Then the way in which they treated abnormal loss is different from the way in which they treated same abnormal loss in previous problems. But I explained you how to treat just like what we did in previous problem, and even I explained how they treated also. Then in this problem, they asked us to prepare accounts in the books of consignee, which is nothing but we need to prepare consignor account, which is reverse to consignee account, which we prepared in the books of consignor, but journal entries are different. So this is all about 7th problem. We'll see 8th, 9th and 10th problem, particularly next session onwards. Till that, take care. Thank you.